Wells only and his guests are not responsible for any losses you may accrue for having weak hands. Where the haters at? Yeah, bitches still ain't showed up. And now, right, we got Hex, flawless uptime. People thought this was a joke. Now they're mad at the chart. It's lullaby music, really, right? It's hard to believe that something like this exists. I get it, but you just gotta come to terms with reality. It just exists. Nothing we can do about it. Buy a steak and chill, baby. Shout out to Marketable Thoughts. You can't get this kind of shit for free anywhere else. It's very important to understand that. And we're handing it out. People thought this was a joke. Now they're mad at the chart. So much luck, once again, because the facts don't give a fuck. Peace. This is Whales Only. Glad you guys can make it out. I'm making some claims that are pretty outlandish, but I can back them up. Boom. End of story. There is no other crypto out there, so don't get it twisted. If you don't understand where you're parking your money, you're gonna pay the consequences for that, and that's just how the cookie crumbles. Boom. We're obliterating everybody, literally. There is nobody else that comes close to what Hex has done. Boom. Oh, it's about to get funky. Funkier than you could have ever imagined. You know, Richard Hart is a boss. Hex is literally the best thing on the planet. It's simple mathematics. What's good, fam? I hope everybody's doing all right. Shout out to you. Hope you guys are individually getting by with all the crazy that's going on out there. Let's do a quick sound check. Let me know if you guys can hear me. Now, I don't know if you guys know, but all of a sudden, Wall Street has like 750,000 Bitcoin that they're disclosing anyway. And, you know, that's just how the cookie crumbles, man. Because I think the government has 300,000 or something like that. I can't remember the numbers anymore. But so much funny stuff going on all fronts. It's pure comedy every day. I mean, I don't know how much you guys are paying attention to just the narratives and how they shift literally minute to minute. I mean, minute to minute, they're shifting. I was thinking yesterday about how literally before they forced Kamala to run for president, you know, I don't know if you guys remember, but right before that time, they were doing cleanup on her as far as the media. They weren't letting people down talk her. But before that, they were down talking her. They were saying she wasn't worthy. All the negative things that are, everybody knows. And I mean, literally in a span of a week and a half, all of that flipped. And now you see all the normies like really catching on because they did it at lightning speed. So because it happened at lightning speed, people are really, really seeing the games that are being played in ways that, they never realized before. And, now people are looking back, thinking back, and connecting dots. When you're hearing people that, normally just wouldn't have any ability to assess certain things, right? Without these events, they're hitting these nails all of a sudden. And, that's quite something, because imagine what's going on in general, right? Well, I'm talking about just the general population. Imagine how awake everybody is now, because they're forcing a person that isn't black to be black, or at least play that they're black. B, denigrate every person that doesn't agree with that notion. C, go from shitting on this lady to making her the queen. I mean, all this happened in lightning time, record time, lightning speed. So it's very, very funny to see people being forced to wake up, because that's ultimately what's happening. You have infighting everywhere. I mean, you got these people talking about civil war, right? But they're already civil warring within their own faction. Everybody's doing it. Democrats, Republicans, you name it. And you can see it. So there clearly isn't going to be any civil war, because you need to have two clear opposing sides for that, not a mess. And we have a mess. So, you know, that pretty much spells that out, uh, which is a good thing, because that's not what they want, right? That's why you see all the coals being stoked all under the fire with regards to Jutopia. Oh, speaking of Jutopia, um, I'm not even monetizing my streams anymore, because I forget to go flip the switch after I'm done, because I just don't stream anymore like that. Anyway, last time I streamed, it was about apparently dudes being able to beat up chicks on TV. And I got an email from YouTube letting me know that I couldn't monetize that video. Just so you guys are aware of where their priorities lie, since you guys like using YouTube and stuff. Because this is why they continue to do this shit. And while you might not have a daughter, you probably got a sister or a mother or an aunt or a cousin that you care about. That's a female. And they're trying to let you know it's open season on females. So protect your family. They already disheveled the men. Don't let them destroy the women. Because then what's left? All right, the men need to pick themselves up and be men at this point. Because as always, nobody cares. Nobody really cares. And now it's obvious, so societally speaking, it is now obvious to both male and females on both sides that there are issues. Things have been, people have been lied to. Things are not what they were told. All these lies that people have been told are not what they thought they were going to be. So, in line with that, people are realizing that yes, men are men and women are women, and everybody has a role because you literally cannot do what you are doing, i.e., the media, you and the politicians and the entertainment people, right? You cannot pretend to confuse people that know who they are. I mean, we're at a point now where we just sat through an Olympics where they were literally letting dudes beat up on chicks like it was normal. So what's the next iteration of their fuckery? They know there's not going to be a civil war, so it's got to be World War III. They have completely flamed the US dollar, which is a reserve currency, leading to all these economic issues globally. It doesn't matter the economy, they exist. And with respect to that, this is leading them down the path of them thinking they're going to be able to set up CBDC rails and all this and all that, which in some cases, they partially exist, but it's not what they want. They want it to be soup to nuts, digital ID, digital money. It's like just like China, social credit score. Full exposure, no privacy, no anonymity. That's the goal. So if you are the type of person that participates in sporting events or whatnot, understand that that's where they're going to begin with the fuckery. Because everybody doesn't fly, but millions of people go to sporting events, millions of people go to entertainment events, and that's where they're going to try to normalize your lack of privacy. They're already making people go through metal detectors just to go to these ridiculous events. So what's next? That's the question. What is next? And are we going to allow it? They already got these bootleg quote unquote gun detectors in subways here. And you got to let people know your First Amendment right, know your Third Amendment right, know your Fourth Amendment right. You cannot let these people just push you the fuck around, because that's why they think they can just push you the fuck around, because you let them. I look for fucking beef. That's exactly why I don't fucking get none. So you need to get on my type of time, because these motherfuckers think they're just gonna tell you what to do. And guess what? Just like in 2020, if you're dumb enough to fucking listen, you're fucked. Super fucked. And you gotta realize 2020 was just level one. With every iteration of fuckery that you fall for, is gonna be more blatant, more obvious, and more deadly. Look at what they are doing in Palestine, or whatever's left of it. Look really close. You think that's the last place that they're gonna fuck up? You really think that? And this is what I find comical about people. They really think that's the last place. They don't understand that that's just the start. That's just the start. Everywhere is next after that, because that's where they get to plant their flag and solidify whatever the fuck bullshit they think they got going on. So that literally cannot happen, because that is tacit approval of their existence, their fuckery, all the shit that they are part of, that they do they get to do and they don't want you doing on one side, and then on the other side that they don't want you doing and they get to do. So understand that utopia is not for you. Utopia is going to destroy whatever it can destroy as long as it allows itself to destroy. So it's ultimately up to you, the individual, what you're going to allow to happen in your life. Like that's what it boils down to. Don't forget them tunnels. They got tunnels for a reason. You know, how much do you know about the tunnels? Because tunnels are everywhere, but I guarantee you, right now, I got a count of 47 bodies watching. I guarantee you, out of those 47 viewers or households, 95% of people have no clue that there's a whole other world under them. Whole other world. Literally, I'm not even exaggerating. You think there's nothing under the ground when there's all types of shit under the ground. That's a whole other world down there. You can't even fathom. And they use it. Where you think all these missing kids have been going for the past 40, 50, 60 years. You know, I remember when I was a kid, they used to put all these bodies on these milk cartons. You know, they don't even do it anymore because they don't want people looking. They stopped. But I would always wonder, how in the fuck do all these kids end up going missing? Oh, now I know exactly how. You know, and it's all tied to everything that we accept, we allow, and we condone. In short, it's everybody's fault. So when you hear people complaining and all of that, you know, and you don't want to hear that shit, let the motherfuckers know, yo, do you know it's your fault? Because I do. Just like I've been telling y'all for fucking years. I mean, now it's time because now all these cocksuckers that thought they understood what was going on are understanding that they don't have a fucking clue. That they don't know what due process is, that they don't know anything about anything because they were with him and now they were automatically switched to being with her. And then on top of that, you know, when you hear these people talking, all they really got to say is, I'm not gonna let that guy win. You know, they sound like fucking Cartman and shit from South Park. Respect my authority. Ah. You know, these are fucking incoherent people. And, you know, this goes to both sides of the coin. Like anybody buying this intermediary crap just hasn't been in crypto. Or should I say fake crypto? Oh man. And you know, this is exactly what's brought the world to where we're at today. To the point where people don't know their basic rights. People don't know how to take care of themselves. People don't know how to fucking defend themselves. People don't know how to think for themselves. People don't know how to do anything for themselves. This is where we're at. And it's literally because everything has been washed out in terms of you being responsible for it as an individual. Now, how do you think that has benefited society as a whole? Because the problem is we have allowed and accepted this to occur. I mean, look at the jungle gyms that exist now versus what we used to have as kids versus what existed for the earlier generation. I mean, just jungle gyms alone have been regressed. Everything has been regressed. So, how do we get it back? Right? Because that's ultimately the question. Right? How do we get it back? Well, we have to take advantage of those people currently in pain at this moment because they thought they understood what was going on. We got to take advantage of these people's emotions just like them motherfuckers do and put their ass in their place and explain to them what the fuck they need to do, which is just simply not comply because it's not even hard. But the simple fact that people don't realize what is going on and how they're being lied to. I mean, imagine the number of people that are devastated because they threw this chick at them because that's what happened. They didn't get the choice. They didn't get to vote at any point about who was going to be their nominee, right? Because these people on that side, like, you got to realize there's levels of stupidity over there that you honestly can't imagine unless you're really involved. And these people think they understand laws. They think they understand rules. Like, you guys got to realize that these people think they know something, right? I mean, I'm talking about like the regular groups of people, not the people making the fucked up rules, because obviously they know what they're doing. They're doing it intentionally, or not even paying attention, so it doesn't fuck with their conscience, right? You pick. It's up to you. Doesn't matter. But that is what's going on. We have people are vested at every facet of society in the current fuckery that's going on. Vested interest. And what that means is they have a direct interest in things continuing to go sideways for you while they benefit. Because that's ultimately what that means. That's how it's working. That's how it's always worked. You know, let's talk about how obvious these things are. When you look at something like the Bernie Madoff fiasco, I love to highlight this specifically as a point of fact of how crooked the system is, and we just let it be. That gentleman was on the board of the NASDAQ exchange for like 20 fucking years. Everybody knew what he was doing. And all of those people that knew what he was doing then are still in position now. Nothing ever happened to them. And they were all complicit. If you're always around a bunch of people, you know always what the fuck they're doing. Because everybody fucking talks. And you don't need no piece of legislation to tell you that shit. Everybody knows that. I'd be highly surprised if anybody that was viewing this or now or in the future, I'd be surprised if they did not know that. So, to wrap this little rant up, be aware of those that are ready to convert and fall off the NPC wagon. Take advantage. Drop the seeds. Let them grow. Because we need to get rid of all of the dummies. Until then, everything continues as is. It's status quo until then. And the only way to get rid of all the dummies is by educating those that have seen some type of light. And those are going to be the people that are disheveled and just feeling down emotionally because they realize they didn't have a clue. So that's where you start to change and create change. And these are things that are important to understand because it's not going to happen by itself, people. Definitely not. Definitely not. Alrighty, now let's talk about the markets. Now, as you guys know, everything is kind of at an inflection point to a certain degree. Actually, let me just pull up a chart. Um, mm, mm, mm. So, kind of what I mean is, we've been running in one direction for a very long time. All right, let me just get rid of this and that. Why is there two of these? Uh, I don't understand. So let me just get rid of that. All right. So this is just a daily chart, right? And looking back 1 year's time, it looks just like regular, some sideways chop going into Q4, mid Q4, and then pop off. All right. I mean, typical stock market year, really. Nothing fancy about this. Just another bull year, right? So when you come back and slice it up year by year, right? Let's go back to August 2023 versus August 2022. Well, you look at that, almost similar. Down into Q1, and then it ripped, into 2023 as we just talked about. And then 2023 just ended, on a down note and then kept going up. So let's go to August 2022 to August 2021. Now, this is I think, yeah, this is year 2 of Rona, basically, right? Everything is still kind of on a downswing. Uh a lot of things are still closed down worldwide, globally, even though they're starting to become open. But you see it's reflected in the price action, right? Like very serious economic depressions are still ongoing. But this is where we got our bottom in the end of 2022, and we've been up ever since. As far as the market, stock market. Oh, God. I think that's it. All right, so here we got August 2021 to August 2020, and it's just straight up. And that's because we had crashed, right? Going in, well, we were already rebounding, but we had a severe correction during the months of February to March. So this type of reaction is what causes, it's like a catalyst. It's an actuator move, right? Because up until that point, the market was just lollygagging along, right? And what I mean, just so you guys can understand, let me get, yeah, this thing here. Like if we look at, okay, let's count, what is this? 80 days of price action, okay? In 80 days, the market did 20% here, okay? Let's see what happened 20 days, 80 days after that. Let's see what we got 80 days here. All right. So this is what I mean exactly. 80 days time after this move, you made 35% in 80 days versus 20% prior to that. And we're talking just one move, because that's why I'm going from like one point to another, one point to another. And I mean, realistically speaking, this move doesn't really finish till up here, but it's neither here nor there. Let's just go by time, right? In terms of time, 35 to 20% after this move. These are market structured things, right? I don't know how to put them in simple English, but let me think. It's like a kid being lazy, right? Let's say you tell a kid, "Hey, go do something," and he does it in a haphazard way, a lazy way, where they don't do it properly, and it ticks you off, and you whoop that ass, right? This is what whooping that ass is. Then after that, they get fucking right, and they do the shit right. So this is equivalent to that, right? This is equivalent to that. So right now, essentially what I'm saying is this might be that. We might have had that type of move where we were just going up, going up, going up in a lazy fashion for so long, right? Because this is kind of what that was. It's kind of a wake up move. And that was kind of a mini wake up move, right? We had a mini wake up move here, another mini one here. Like they happen from time to time, right? But what is the market doing before and after? That's what we need to take a look at. Let's see what the market was doing before. In 40 days' time, excuse me, we made 12%. I'm pretty sure we've already surpassed that 12%. We're close to it, yeah. So we're close to it already, and only 11 days, 8 days. So, long story short, market corrections are points of opportunity, right? They even if the market would have kept correcting, let's say it would have kept going down here, because that's logic. That market would have came back at some point. So you got to understand what you got to do with markets in these instances, and how you got to set yourself up for engaging said market when it's appropriate. Because ultimately, everybody's objective is to make money from the markets. When you guys really got to think about it, you know, there's I don't know how many markets, right? Just futures alone. There must be, I don't know, 60 markets or something. Track. Let me see. Uh, just give me a count. 76. So maybe like 60. Yeah, because I got a whole bunch of crap here that shouldn't even be here. So minus these. You don't want to count these. Let's see, 1, 2, 3, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So 76 minus 21 is what? 55. So 55 tickers. That's a lot of tickers to track, right? So that's a lot of options, and this is just one specific market, right? You still got stocks, you still got bonds, you still got the options markets of all those markets. I mean, there's a million different ways to make money, literally. Oh, and I see somebody asking about Forex. And look, here's the deal with Forex. You can trade Forex if you want, right? But you just have to understand that governments have essentially made those markets limited in terms of opportunity. So let's look at one day, for example. And this is just the Australian dollar. This is a market that I used to trade all the time because it was an easy market to extract a few $100 from in one move. So it's $10 a tick. So if you get a 30 tick move, which was pretty standard back in the day in a rotation, um, that's $300, right? That's a good day. So let's just look at a couple days time. Let's see here. This is today. Right now, it is 11:30 a.m. Eastern. Right. This is pretty much the start of the Forex section session in the U.S. 8:30 New York time. So anything in between that and really 2, 3 o'clock New York is really overnight because institutions really aren't doing much of anything like after 3:30. They're just not in Forex unless they have some derivative situation or some reason to. And I'm talking about trading entities. The people that are causing the markets to move from a speculative standpoint, not commercial entities that use the market regardless, whenever. I'm not talking about those parties. I'm talking about specifically speculators and the big speculators. So the big speculators at 3 p.m. don't really engage the market. Um, uh, they sorry guys, give me a second here. They they don't have to work till freaking 10 o'clock. It's their business to run, so they work whenever they work. Anyways, point is, let's look at these rotations, okay? There's 9 o'clock rotation to 11:30. So we're talking about, and this is in the New York session now, and this is the Australian dollar. We're talking about 38 ticks in 2 hours. That's only $400 in 2 hours. Now, I know that sounds a little ridiculous because it takes a lot of people all day to make $300. I'm here talking about only 380 in 2 hours. Well, you guys got to understand, back in the day, that was something we could do in an hour. So 2 hours is a stretch. Nobody wants to trade that. Some people do, of course, but here's a, and this is a double trend day, right? Like these are not common anymore. So, long story short, because of all the government intervention in currency markets, the opportunities are just a lot more limited than they used to be. So the market just is not as active as it used to be. But here's a 77 tick opportunity. Probably could have stole 60 out of that comfortably. So it just depends, how you view the market and stuff. So look, the first thing you got to understand about markets when you're engaging them is that you got to know who the players are. Because if you don't know who the players are, you can't develop a narrative that makes sense to price action and the data that you come across, right? So that is number one, what you have to do. You have to know who the players in the market are and understand why they do what they do. This is how you can figure out where bottom. I mean, besides a chart, right? You got to kind of talk yourself into the right story. Because if they're saying one thing on TV, you best believe it's something else. So it's really up to you to figure out what that other thing is. Nobody else can figure it out for you, and that's important to know. Because when you're sitting there about to press click or buy, regardless of the time frame, that's your decision, and you're gonna suffer the consequence of that decision. So do yourself a favor and learn the appropriate things. Now, back to where I think we are with respect to markets. Now, I already explained to you guys what I think is going on as far as what it could be happening. Now, let me progress a little further as far as what I think is going to happen. Now, let me mute this damn noise. Hold on, guys. All right, that should be enough. All right, so you guys see this level right here. Well, this is the level that pretty much started the cascade lower. Right, this is just a down move. This is just the initial thrust. This could have easily stopped right here. Right, that could have easily stopped right there. It didn't have to continue. Right, so because it continued, we now have to watch this area for a potential reversal or lack thereof, because this is the area of significance now. Like, as you guys can see, these lines right here, these lines, these blue lines, these are value area lines. And what they mean is that that's where a majority of price activity took place as price traveled through here. In short, this is a potential area of support. And because it was a potential area of support, as you guys see right here, as you saw, market came down here and retraced, which is what the green candle means, and went back up and then came back down and broke it. So now this is the area of contention for the market. And I'm showing you the futures market, which is a derivative of the cash market, but it's the same thing, because the flows are not going to be different in one market versus another. They're just going to be whatever they're going to be. And everything is going to trace and track whatever everything is. Now, note the volume profile here. I think, let me double check. Yeah, blue is up and gold is down. So you have an inordinate amount of yellow here, gold versus blue. So it makes sense that anything above this area be resistance if it was one support, right? So this is where we're at right now in terms of the market, present position, present stance, and where it could go next. Right now, here's the thing: if the market does choose to reverse and flows are to the downside, what this means is that, look out below, because we're probably going to break this area too. Because as you guys can see, the market typically just continues on higher, right? I mean, it's very rare to get a severe correction, but they do come from time to time, right? And I guess the question is it time now? Could very well be. We're entering election season. It's November 2021. It is now November, or what, August 2024, right? And we are sitting at 554 days. 605 days is September, around sometime. And September is usually a bearish month. Well, September, October. So it's highly probable that we could potentially see some downward price action between now and then, because we're in the time for it to occur. Things happen similarly, just not exactly the same. And if this is, right, really a corrective move, maybe we're here, right? Maybe that's where we're at after all. And maybe we're not going to see 700 plus days, and we're only going to see 611 days. And the move has already started, because the market is already pretty long in the tooth. Because if you go back to 2019, right, it took the market, let me get rid of this, took the market for 121 days to achieve 68%. 421 days. Now, from 2020 to 2022, the market tripled in 735 days. So 2 years, basically. Now, this previous bull run that started at really, the start date is really October. So my math was a little off, I guess. We're already near 700 days. Currently 670 days, and we're already doubled. So what's to say we do continue? What's to say we're not in a corrective pattern already? Because just by looking at these pictures from afar, it looks like we are in similar corrective patterns. Because again, they don't have to look exactly the same, guys. They just have to look similar, right? And if we want to be fancy and we want to be, but blah blah blah, just make a counter argument for it. The last time the market tripled, it took it, I don't know, what's 1,300 days, about 365. 38 months. 38 months. That's 3 years, right? I mean, that's crazy. 3.65 years. 3.65 years. Now, this isn't to say we can't see a 1995 event or that we can't see 2009 through 2016 where the market just kept going up no matter what. But the pattern is evident in this market. It's not evident in these markets. And that's the difference. Okay, if we go back to 95, which was another, the start of one of those crazy markets, there were no futures back then. Blech. All right, but we can see the end of the bull market, right? Because this is kind of my point. You can see the pattern in the market. The market doesn't hide itself, it shows itself at all times. So, now this is what it's looking like. So, unless something changes in the short term, as far as money flows are concerned, because everything is revolving around money and where it has to go. Today, my expectations were for the market to hit a high and reverse lower, but that's not what it's doing. It's taking in between its two minimum outer bounds and it's rotating around the settlement price. And what it means is that it's essentially consolidating. And it looks like it's consolidating for a move higher as of now, but the market isn't set up for a move higher. It's set up for a move lower. And this is why you have this yellow signal here. That's what this signal means. And as you guys can see, the opposing signal right here is blue. This is a buy signal. This is a sell signal. But as you guys can see, the longer the signal, the older it is. The newer the signal, the shorter it is. And in the same vein, the younger it is, the stronger the signal. The older it is, the weaker the signal. In short, we have to defer to the market's preference to the short side as of now until things change, because that's the market structure that we're giving. And if we take a good look, disregarding the profiles for now, let's just take a good look at, let's disregard the Donchian channels as well. Let's just take a good look at the slopes of the moving averages. And let's disregard the indicators below. We're looking at the orange line Look at what happened when it turned down here. You had it following this trend and then it started flattening out. Then it rotated higher, rotated lower, but it was flat this whole time, right? So just look at that. Look at the shape of the slopes for these moving averages, right? As they progress through time, you see the slope becomes positive, so you have to buy because prices are continuing higher, and the average is letting you know that that's the preference, right? And then here we find ourselves in a sideways situation again. But look, we're above the blue moving average, which is a determinant for the trend. Okay, and then the market continues this path on higher. So, long story short, we're now seeing the orange line finding itself becoming flat again, whereby it looks like the market wants to go short and it's setting itself up to go short, and it had done that before, right? Here we are. Divergence, negative divergence, and everything. Same deal. But what happened? Moving averages said no thank you. Now, I know I haven't talked about moving averages a lot, but this is where I started, and I realized that this is where I'm going to finish because this is just how I think about the market. So it works until it doesn't, and this area, which is the settlement price area, is the area of resistance for the market until further notice, right? And if it breaks out of that, then we have further areas above the market to rely on for containment. And that last level to concern ourselves with is this area up here, 19,660. Break that, and then we break this high here of 19,711. Well, we can probably rest assured that the trend is going to continue higher. But long story short, if this orange line continues to remain flat and price continues to trade around it for the rest of the session and below the settlement price, right? This is probably going to be a telltale sign that we are going to continue to maybe see another day of consolidation tomorrow before an actual rollover the following day. And if that does materialize, sorry, this is in the chart for that. That does materialize, right? Because this is what I'm talking about. I'm talking about maybe another sideways day, then maybe another down, a beginning of the down move. Well, probably down to here. And back into this zone. And back into that zone, probably. Something like that. I mean, this is assuming it doesn't just freaking go all out and just, do one of these again. I mean, how many points did we cover in 3 days? That shit was crazy. People thought the bear market was it. I mean, this is why they were talking so negatively about the Fed and its activities and what it hasn't or hasn't done and stuff like that. So much so they were calling for emergency rate cuts into a weekend. And then look at where we are now. Already completely reversed that move. Right? But that's because the sentiment shifted that quickly. Right? And this is what you really need to know about the market. Technical analysis and all that shit doesn't really matter. Because if you don't know what you're looking at, you're gonna get it wrong anyway. But understanding that people are excited is easy. Understanding that people are sad is easy, or scared, afraid is easy. And all you have to do is the opposite of that, and you win every time. You cannot lose. Literally cannot lose. As long as you trade off of that. And it's easy to say, but man, it's hard to do because we like to click. We're monkeys. So what can we say? As you guys can see, prices are traveling right higher, and this is just me zooming in on price action, right? And you guys can see from the 11:20 time, but really from 10:45 on to now, market structure has been shifting itself to somewhat bullish. But really, when you look at the chart, it's kind of hard to call it. It's kind of just it's kind of weak until it breaks above this blue line 591, right? And what you're seeing in the profile on the right side is all the selling activity that's taking place up here, just all the trading activity that's taking place up here. Right here, the dark part, and in terms of red and green, these bars represent the dominant price action at these levels. So you can highlight this area as a clear sign of resistance, right? Definitely not a secret because you already have the point of contact or point of control up here, excuse me, being 7975. And then above that area is where all the selling happened. So you have buyers right below, sellers right above, and the sellers won. And that's what's been pushing the market lower from that level all day. So it'd be interesting to see what happens here because this is going to be a point of inflection for the market. And interestingly enough, when you zoom out, it's a very important area. It just so happens because it's right below that area that overnight high, right? Which, as you guys see, 685 is relevant within this little small time frame because that's how much activity took place up here. Because when we zoom back over to this chart, oh, wrong one, wrong one. 681. What was this low here? 654. And we traded up to 683. So we made a very nice incursion into the zone of resistance. It's a resistance zone. That's really what that is in short. Um, so to go back and test it again would be out of character for a weak market because now we're above what is volume weighted average price, which is this blue line right here. That's highlighting the 1940, the 9546 area. This line. As you guys see, this line was above price before, and price is weak. Now it's above price. But not only is it above price, but it's above price again because it came once and now it's back. So we need to see what's going to happen up here before we can make any determinations about the next moves in the market. But for now, it looks like the sellers are stepping back in. That's what it looks like. Let's see if we get any changes. And that's what we're getting right now from the price activity we're seeing on the chart, dating back to the past 7-8 minutes. So if the market is able to sustain price below 585, 595, then the odds of a significant move lower and sellers really coming in to try to take over is very, very probable. Um, so let's talk about crypto for a second, just because we probably should. As I've said before, it's really imperative that you guys understand what crypto is and not with respect to what institutions and media want you to think it is, because that is not crypto. Those are fake markets. Those are the really, those are the markets that, when people say, oh, markets are manipulated and it's obvious, those are the markets. Those fake crypto markets you guys love. Going to coin market crap and whatever other fuck site exists. I don't know. I don't partake in none of that shit. 'Cause that's not crypto. Doesn't matter what you say. Doesn't matter what your opinion is. Factually speaking, that shit is not fucking crypto. Period. So I can't even call it a casino because the stock market, futures markets, and those markets are more of a casino, in my opinion, than that shit. Because that shit is just where you go to lose money. And I mean, if you're smart enough to play it the right way, then obviously not. But if you don't know what crypto is, it's impossible for you to play it the right way. And that's the catch 22. Because you don't know what's crypto if you don't know, especially if you're going to a website to find out what exists. That's not crypto. So you're just gonna constantly find yourself running into crappy situations where you lose your money, whatever, whatever, because you don't know any better about risk management, about just basics. You don't put your whole wad in one trade and things like that because everybody is selling crypto as this get rich quick scheme, and it yeah, you can get lucky and get rich quick for sure. But do you understand how that happened? Do you understand if you can actually take your money out? Things like that. Basics. You- and I mean, it's crazy because you'll go on a place like Reddit and just read up on what people are thinking and just whatever they're posting, right? Just to get an understanding of what people are thinking, whatever the trends are and whatnot. And come to find out, so many people are day trading crypto. It's fucking crazy. And they don't know that they're not, like, they really could get robbed and it's okay. Like, people don't know that. Like, that's what crypto is. Literally. The crypto that's sold to you is that. There are no protections. There are no regulators. There are no nothing. And that's exactly why that's what they want to sell you. That shit. Because they don't want you to find an actual store of value. They don't want you to find financial freedom. They don't want you to find a beneficial motif for your existence. And at the same time, in the same vein, they're gaslighting you into believing that you can just get rich quick somewhere. And that's why so many people just end up in these fucked up traps. I mean, and it's a fucked up trap because you can't escape it, no matter what you think, unless you do the work and realize that you are wrong with your way of thinking. That's the only way. Some people are wired for success in certain endeavors, and some people are wired for certain success in others. Certain success, not just success, but certain success. You put me in a hostile, ambiguous environment, I'm gonna fucking thrive. You put me in something like the military, where there is no room for anything but rigid structure, I'm going to fail. I don't operate well in those environments. I had no idea until I found myself in one. Because even though I'm militant in my own way. And that's why, you got to know who you are, is a long story short on that one. This is how you're able to engage certain things that you're not successful in and become successful in them. Taking a step back and realizing, hey, I'm wrong here. What am I doing wrong? What can I do to fix it? Because we're all imperfect, and we're even if we all have references and source material and things we can lean on, are we doing the work to help ourselves achieve the goals we want to achieve with focus? Because if we're not focused on them, then we're never going to achieve them, right? uh Here's a good question. So, all right, the yen carry trade, what is that? So every yield curve has a point on the curve that is literally considered overnight cash. That overnight cash, the currency you use every day in your respective country, has an interest rate tied to it. So in Japan, let's see. Oh, not the button I want to press. This is the best way to explain it. Where are you? Do they not show? Um. All right. All right. Go to Asia Pac. Okay, you see how it says overnight here? Let's go. Not. Is this thing just not working? Alrighty. All right. Australia. All right. All right. China. Say you're long. Australian dollar, CNY. Yeah. That's a currency pair, right? Australian dollar versus Chinese yuan. Right. When you look at a big picture view of that, what does it look like? It looks like people do not want the Australian currency and they prefer to have the Chinese yuan. That's what it looks like, because the value is down from 10 years ago, 15 years ago, to 4.5 now. Whether that's the case or not, I don't know. But it's an example that we can see is happening in reality. However, let's go back to these interest rates. As I just explained, every market has an overnight rate. Australia, it's not showing the overnight rate for Australia, but it definitely has one. And you can rest assured that's the interest rate that's changed, by the way. That interest rate that every country changes, that's the overnight rate that they're changing. So that rate is probably, that 1 year rate is probably close to that overnight rate, 4.5 or so, probably. It's probably higher. It's probably 4.5, actually. Mm, Hold on, guys. Let me mute myself. Let's give this thing a minute. Because this is actually, I think, very interesting. I figured this out as a kid when I was young. Attributes of a currency. So here we go. Australia is 4.35%. That's the overnight rate for Australia. China is 3.35. So 4.35 minus 3.35 equals an inversion of 1%, right? You're actually out 1% because the real math is as follows. It's 4.35 minus 3.35, but this value is actually positive. And it's not showing me the damn thing. Fuck. All right. Well, this is annoying. Wolfram to the rescue. All right. So the math is actually 4.35 minus 3.35, right? Because that's a positive value. So in reality, the answer is -1, right? Even though this is giving you 1, with respect to currency trading, it's -1 because you're saying I'm going to pay 4.35% overnight versus receiving 3.35% overnight. That's what this chart is showing. Because whoever is not long the Australian dollar is not receiving that 4.35%. That 4.35%, if you only get that if you're long. So if you're short, that means you are paying that and you're only receiving the 3.35. So now you have a basic understanding of interest rate differentials. We know the United States is at like 5.35. I'm not able to pull it up for some reason. Federal Reserve, well, I guess it's just not listed here because it's for everything but them. Oh, that's right. I looked for Asia Pac. Never mind. I'm slow and I forgot. So let's go to Japan. So Japan has a positive 25 basis point interest rate. At one point, it wasn't that. At one point, let's go to, oh, wrong one. At one point, the 10-year was negative a quarter of a percent. Now it's a positive a quarter of a percent for the overnight rate. Because as you guys can see, the 10-year is almost at 1% again. But this is the Japanese yen. US US Fed. And this is the cash rate for the US. All right, let me see if I can find the cash rates for Japan. I don't think they have that here. Yeah, I don't think they have that. Nope. Yeah, they probably don't have it. All right, so what I'm gonna do is I'm going to do some math so you guys can see what I'm trying to show you, but it's not gonna be correct. So you know what? Let's go with this. just for my peace of mind. God damn it. The fuck did I do? All right. JP10Y. All right. So what you're going to see right now is what an interest rate differential looks like on a chart. Except for that, we're going to do the 10-year US yield versus the 10-year Japanese yield. And as you guys saw, it was 88 basis points for Japan, almost 1%. And for the US, I think it's almost 4% for the 10-year, 3.9. So there you go. 3.9 minus 8.8 gives you 3.02. Or 0.88 gives you 3.02. So that's the interest rate. Hold on. Let me add. I'm going to add the yen to this. Where is that little button? There we go. I mean, I don't think it's obvious on first glance, but it should be. The you know, these currency pairs, they trade with respect to these to these interest rate changes. So people should pay attention to them because they're not like random. But they'll trade these markets and not even, give it two fucking blinks. So the line is dollar yen, and the candles are the 10-year interest rate differentials. And as you presently is 3.0%. So at some point, people just started dumping it for one reason or another. And it seems like the reason is because the interest rate that people were enjoying above 3.5% was eating into the gains that people had, and they started selling down. That's what it looks like because the interest rate went down starting in April, basically May. And people didn't start selling until August, early July. Actually, mid July, that's right. The top was July 11th in equity markets. And that's when the currency market was already rolling over. So currencies and interest rates always lead or lag. And when they lag is at the end of a move. So if they lead, like they did in this instance, you're welcome. And here we go, right? The rate lagged and the market itself led. So I didn't even have to go to another chart to prove it to you. Here it is. And it's just understanding these things that help you become an effective market operator, just not still being a trade you don't want to be. Imagine being short from 160 and then seeing it go all the way down 145 and then still being in this damn thing at 148. Like that would be annoying as fuck. Because now you're out, three whole points and who knows how many damn ticks or pips or whatever. So that's important to know. When interest rates lead versus when they lag. That's crucial, especially if you're trading currencies or anything that moves off of that. Let's throw another market on here, just to see if there's any relation elsewhere. Because I haven't done it in a while, just because I don't need to. But let's see. So here we go. Right, as you guys can see, 10, 11, right? 10 to 11, also same deal. But again, this is July. The market interest rate differential was damn near traded inverted here. It went up, the market bottom. It rolled over, and this market bottomed out. right? So clearly not one to one, even though they're tied together, right? And it's really all a function of interest rates. So let me zoom out to make a decent example. So at this point, you have to realize that 2% isn't a lot, right? So once we get above 2%, that is kind of what forces market dynamics to change, right? People start changing their behavior versus just buying dollar yen all this time. All they did was just buy dollar yen. Then the behavior started changing right around the 2% mark because now things are changing a bit. It gives people an ability to have a different preference with respect to how they treat their money. And that's honestly the most important thing to understand about interest rates and how markets react to them because that's the ticket. These relations are going to change over time because preferences change over time. And that's the importance in that lesson. But I hope that kind of answers the question as far as what the incident was over. Um, once the market was so long, right? Because we're talking about who knows how long, right? We're talking about from at least. Let me put the dollar yen back up here. Here we go. We're talking about. Let's go back to at least 2023, right? We're talking about at least 128, from 128 to 160. That's 30,000 pips or 3,000 pips equivalent, something like that. 3,000 pip equivalent. So that's a lot of money, right? And the question then is, who's going to let all of that go just because interest rate differentials? And this is ultimately why you saw this sell off. And what's piggybacking off of that with respect to the rest of the market is the fact that people they'll they have these accounts at these prime brokers where they can, or just really any broker, where they can borrow cash based on securities that they have in their accounts, based on cash that they have in their accounts. And that is why when these rate differentials change over time, these markets change over time. And in line with that, actually, that's not what I wanted. In line with that, these markets are going to change over time. Right now you're looking at the dollar yen versus Nasdaq. Right? I mean, you guys can see they're almost identical, almost. And at certain points in time, they're not going to be. And this was just the other day. And this is why it's critical to understand the underlying. Don't think you can rely on some shortcut. Because, like I've always told you guys, there's really no such thing. You just have to know, or somebody's selling you a lie. And that's just how the cookie crumbles. So I hope that answers the question because everything is interconnected in a global market, right? In markets where everything is tied together by no choice, you already know that everything is going to have to be tied together. And that's pretty much where it all boils down to. Now, this is a good question. Is the problem of Bitcoin that it can only be traded on centralized exchanges? The, the answer for that question is, do you think you're trading Bitcoin on centralized exchanges? Because if you can't take it off of that centralized exchange, is it really Bitcoin? So that's my answer to that question. And shout out to everybody in the chat, of course, as always. Um, So that's the carry trade. Let me explain it just from a structural perspective. A carry trade is a trade where a broker gives you leverage because you have taken this currency and given it up as collateral, or taking this security up and giving it up as collateral. So now that trade that you just took on with that money that you just got for that collateral, i.e., dollar, yen, US Treasury, whatever it is now carrying that trade because of that money. And the idea is that you only want to hold that trade long, dollar yen, because the interest rate differential is long. It's positive to those holding the dollar. If you're holding the yen and short the dollar, well, you're paying somebody 5% overnight. Why in the fuck would you do that? Only a moron would do that, right? So you got to understand that the only actors on the opposite side of a long dollar yen are commercial players that have to engage that market in that fashion because nobody's willingly going to give up 5%. So once that interest rate differential compressed far enough for the longs to say we're out, they had to unwind all of those risk tied trades to that dollar yen trade because they didn't want to keep losing the yield they were getting and the P&L that they already had. So I hope that answers that question. How much money you need to trade this? I wouldn't really advise trading forex cash because your leverage in the U.S. has been crushed. I think the max you can get now is like 50 to 1, and in futures you get way more leverage than that. And if you actually let's talk about that because this is a real thing that I do advise people learn how to take risk and learn how markets work and learn how to benefit from what is already out here for us to take advantage of. I don't have anything to sell you specifically, but I have information to share, which is just as good, right? So I trade the Nasdaq. Um, Sometimes I trade this one. Sometimes I trade the big one. The little one, which is a micro, is 50 cents a tick or $2 a point. And we'll look at the contract specifications right after this. Actually, let's do it at the same time just because it's weird not doing it like that. So I'm gonna have one page open with contract specifications and one page open with the margin. So $100 to day trade it, $2,000 to hold it overnight. You don't really got to do the overnight, but whatever. 50 cents a tick. 4 ticks is a point. 1 point is $2. The Nasdaq can easily move 400 points, 200 points in a day. So that means in dollar terms, you could easily extract between $400 and $800 a day using only $100 every day. It's not even hard. You can make it hard, but it's not. And these are the opportunities that exist just out here. You know, the stocks exist. You can trade Forex futures if you're really inclined to trade that because you think you really got something figured out with that. That's fine. You got that too. And they got the regular contracts for that right here, which is $10 a tick. I think the British pounds is 6.25 a pound or 6.25 pound, £6 25 pence a pound or a tick, excuse me. Canadian dollars $10 a tick. Euro is 12.50 a tick, I think, or 6.50 or five, whatever the half, six and a quarter a tick because they reduced it, but in dollars because it's half ticks now. So the pound and the Oh, I think they actually changed all currencies to have ticks. Yeah, actually, this is why people stop trading fucking FX, because they changed all these damn currencies to have ticks in the futures, and people don't like that because it forces the market to have to travel further for no reason. It's just a volatility thing. I'm not going to get into that because then it becomes a whole 2 hour stream, and I'm about to wrap this up. But yen, you see, you got the overnight. The overnight is the maintenance price for margin. So if you want to trade a 10 lot position, a 10 car position, a 10 contract position in the Australian dollar, you got to come up with $14,500 if you want to hold it overnight. If you want to hold it for the day, $3,625. That's how that works. But they also have micro contracts that fit the worker man's budget. So you can learn how to trade if you were really inclined to learn how to trade and extract thousands of dollars from these markets, because they're out here to be made, right? Just like you can take 50 cents a tick out of the small contract, you can take $5 a tick out of the big contract. And I'm gonna tell you what, once you can trade the small, you're trading the big already. It's the same thing. It's just your pot. How big is your pot? Can you put $100 on the trade, or can you put what is it, 500 or whatever it is, 1,000 or whatever, 1,000 on a trade? That's the question. And only you can answer that, right? But the opportunity to make money is there, and you never even have to exit trading this market, because guess what? 200 to 400 points a day is a lot, and it's consistent as long as the market's moving, right? So there's a lot of opportunity out here to make money. Do not get locked into these fake crypto markets. While these markets are also manipulated to a certain extent politically, they are markets that can be conquered. Jim Simons is a great example that's very well known of that. Warren Buffett is another example. And then there's trillions of other people that do it every day. The question is, are you about your hustle or are you about your grind? Because there's a million different ways to make it happen if you're inclined. So that's all I really got for today. There's a lot of money out here to be made, people. I highly advise you go out here and do yourself the favor and learn about all the different ways to make money. And look, we've now cleared out a resistance level. Before we get off, let's talk about this. Um, whoa. All right. Do I have my thing on? Nope. All right. So we've just got back to a point of resistance where markets make sense that they auction up to there. Well, we're not even there yet, but we're close to getting there. So this is not out of the norm or out of the realm of expectation. Um, the question then becomes, what will the market do after it reaches this level? We know that these shorts covered here in the 50 in the 591 area. We already talked about this earlier in the stream, and the market came and punched right through, right? And that's something we can talk about, how that was obviously going to happen later on, because again, you can't speak in absolutes. But if you understand market structure and you already knew it was tested once and it came back to get tested again, odds of it getting penetrated again were high if it came back again, because then that would have been the third time. 1, 2, and then 3. You're just not gonna see a lot of pressure be put on a certain level, especially in the same session like that often. So that's why you can surmise to guess that. So we have the level to encroach on here. 634.50. And then the next level after that, 667 and a quarter. So if we blast through those levels, folks, the trend is going to definitely continue, and the bears are going to definitely get taken out of the game, taken out of the field today. And that's just how the cookie crumbled today for them. But as you guys can see, the math does not lie, because price respects these levels. The math don't lie. So be sure that you understand everything is math. And words are very elusive. That's why you have to make it Lego snap in your brain. If not, it's a lie. Appreciate you guys for taking the time out today, for tuning in. I'll probably stream Sunday. There's probably going to be more stuff to talk about. Yeah, I'm not even engaged in that nonsense. I mean, the markets aren't even engaged in that nonsense. Because last time, the only thing that got the markets to sell off was the idea of the economy being closed. Right? That's all. So don't forget, you got the markets to extract value from, and then you have the markets to put value into. And you guys already know Hex, Pulse Chain, PulseX, Inc. Those are actual cryptocurrencies. Very simple. If there's people in the way, not cryptocurrency. Peace. Right? This is Whales Only. Glad you guys can make it out. I'm making some claims that are pretty outlandish, but I can back them up. Boom. End of story. There is no other crypto out there, so don't get it twisted. If you don't understand where you're parking your money, you're going to pay the consequences for that, and that's just how the cookie crumbles. Boom. We're obliterating everybody. Literally. There is nobody else that comes close to what Hex has done. Boom. Oh, it's about to get funky. Funkier than you could have ever imagined. You know, Richard Hart is a boss. Hex is